Alrighty, folks, you heard it on this channel a couple of times. First, you heard it from Joseph Wang, the Fed guy. He coined the term crash up about 9, maybe 12 months ago. We are now into 2025. We are a day away from inauguration. Is it fair to say the crash up has more room to run? We've got the one and only Mr. Dan Bird here today to bring clarity to us. How you doing, buddy?
I'm doing great. Does he know that I've copyrighted that term?
Oh,
Crash out.
that's awesome. That's awesome. I'll let you two figure that out. But yeah,
I'm
the
just
crash.
kidding. Just
I
kidding.
know, I know. The crash up is, when Joseph made that call on the channel, it was very early, and thus far he has been nothing but right. So kudos to him. But let's talk crash up 2025. Are we on the cusp of another moonshot?
I don't know if I go that far, but I think it's going to surprise people,
All right. Well,
especially
tell us.
people that are expecting a crash down.
Yeah,
Remember what I said last week? I think it was last week when I said when everyone is expecting the same thing, something else happens.
I remember that. That was your midweek update. Yes.
Right. Yeah. So something else is happening.
Okay. All right. Well, it's interesting. I've been telling my audience, and be curious to see what you think of this. Is buckle up. We're going to get a lot of stuff happening on Monday, tomorrow. I think there's going to be a lot of screaming by the talking heads on TV, and I don't think us, even the traditional media, I don't think they're going to see a plan, right? I think there's going to be so many things going to go so many different directions, and I think it's going to take us time to kind of see the master plan, which is okay. But yeah, I think Monday, Tuesday, Wednesday could be interesting to watch.
Yeah, next week for sure. I'm not sure it'll start Monday, but I mean, it could. Knowing Trump, he might just do it the minute after he's inaugurated.
Oh, I'll put money on it right now. There's executive orders flying out Monday afternoon. There's no
Right.
question.
Yeah. And a lot of it will be things that are immediate. So
Yeah.
we'll see how it pans out.
Let me just run this by you. I got this from I was listening to a video from Fundstrat, Tom Lee's company. I think that's his name. Another one of its analysts. He actually proposed that one of the outcomes of Trump's, kind of early days, 3 to 6 months, might be a complete collapse in the oil price. Now, this was said because, Trump's drill baby drill. I have heard that we may have an emergency order on energy, and that might light the fire and produce an extra 3 million barrels of oil.
Yeah.
If we get a crash of 25 or 50%, because Fundstrat was talking about $80 oil going to 40. I'm not willing to go there, but I'll go 80 to 60. That's deflationary. And that's going to help everybody, especially the poor.
Yes, that's right. It will, and a lot of things that occur help the rich people that have hard assets. Let me put it that way.
Correct.
I won't call them rich necessarily. People with hard assets instead of savings accounts.
Hmm.
But this one, yes, you're right. This one will help the middle class because it will be reflected, especially in the wintertime.
Hmm.
It'll be reflected almost immediately.
Yeah, exactly.
So,
Yeah. So it's
so
going to be interesting.
and I do agree that's something he'll do right away. I mean, I can see him doing that tomorrow.
Yeah.
Yeah.
Yeah. That'll be something. Again, folks, we're going to get a lot of cross currents. I would ask you just to step back, let the chaos ensue. Don't do anything different. Just, let's wait 3 or 4 weeks and see if we can't pull together a plan. Dan and I will be talking every Sunday, kind of giving our latest and greatest stuff. But yeah, I expect some stuff tomorrow.
Yeah, and also I would recommend to try to separate the bipartisan politics from the policy.
Correct.
Just look at and even separate the dislike for the character himself
Hmm.
from the policies and just focus on the policies and understand what the policies are going to do. Because
Yep.
that's the important part. That's what's going to affect everybody. That's what's going to affect the economy.
Absolutely. Well, let's get into it. Let's talk crash up. We talked just a minute pre-roll, and you said we might get confirmation of a crash up Tuesday. So I'm curious what you're looking at, what a crash up really is, in your opinion. So let's dig into the setup.
All right, I'll show you the actual chart and I'll explain what I mean by that. Let's see, hang on. I'm going to share my screen here in 1 second.
Mhm.
All right, can you see that?
Yes, I can.
So this is my website, breakpointtrading.net. For anybody that is interested in my YouTube channel, which I do every day, you can go to this website. It's right in the upper right corner. Don't ask Michael Zuber to post the link because YouTube takes the links down, so it can't do
Yep.
that. But it's very easy to find it. Just go to breakpointtrading.net and it's right there in the upper right.
I
Um,
appreciate you. I must get that question 5 times a week. I can't
yeah,
do it, folks. The links go away.
right. I know. I've seen that. That's why I'm stressing it.
There you go.
For
Thank
those
you.
that get my newsletter, it's also that little box right there that I just clicked on. It's also in the upper right, upper top of my newsletter. So right there is also the YouTube channel. So
Mhm.
there's lots of ways you can do it. I've got some cartoons about TikTok this week.
Yeah. Oh, I made a call this morning. I think TikTok's going to be turned back on Friday.
Could
By
be.
Friday. By Friday.
Yeah. Yeah. I like this one. We can't just ban TikTok outright. We need to make millions of kids want to leave the platform. So make their parents join TikTok so it's no longer cool. That's your plan. Yeah, just like what happened with Facebook.
Mhm.
Facebook's not cool because parents were joining and they all went to TikTok. So now just get the parents to join TikTok.
There you go. There you go. All right.
All right, so let me show you. Actually, where am I? Right here. Let me show you the. I'm gonna actually go to the market bias matrix and notice over here
Hmm.
what it looks like this week.
We've seen a significant reversal.
No kidding. And this is incredibly. I mean, when I started putting this together, I didn't really know what it would look like over the
Hmm.
long term. It has actually been incredibly accurate to identify pretty early on which direction the market's heading.
Hmm.
This is 3 days in a row. It's gone
Okay.
straight up, right?
Hmm.
But if I go to the market bias page, you can get actually the links to each one of those charts that make up this whole thing.
Right.
And the S&P is the one I want to show you. And this is what I mean by we'll get confirmation on Tuesday.
Got it.
So there's the chart. So I've had these lines in here for a long time.
Hmm.
This is the gap right there. So I went down and closed the gap. And as soon as it did, it bounced higher last week.
Yep. Yep.
And then it started going up, went above the 2021 day, hit the 50 and got rejected. And then on Friday, it finally made it above this downtrend line, which has been in place for a month,
Yeah.
right? So finally made it above it. So that's good. And it's above the 50 as well. So that's good. That implies that the crash up has started.
Yeah.
However, the candle on Friday was a spinning top.
I was going to ask you that. That looks like a spinning top. I should have said it before you called it. Damn it.
Good for
I'm
you.
learning. I'm
You're
learning.
learning. Yes. So what does a spinning top mean?
It means the market's indecisive which way it
This
wants
is
to
a
go.
pop quiz. Very good, Michael. You can move to the head of the class.
Yay! First time.
Yes, indecision. So it went up, it went down, it ended at the same place it started. Now, this can be a reversal pattern,
Hmm.
but it also can be a continuation pattern.
Hmm.
And you don't know until you get confirmation the next day. And the next day is Tuesday.
Okay.
So that's what I mean. By Tuesday, we'll know. It will be confirmed.
Well, so let's talk about Tuesday morning, right? Again, I cannot imagine the animal spirits, if you will, being
Mm-hmm.
anything but hungry for blood on Tuesday morning. It just feels like, um, you know, it's going to feel like Christmas morning. I don't know. Tuesday
Yeah,
morning I'm going to call it, it's going to be up. I don't know if it finishes Tuesday up, but Tuesday morning, post inauguration, post parties, post this, post that. I'm going to guess there's a gap up early in the morning, but what do I know?
I would agree with that. And as I've always said, it's the close that's important, not the open.
Correct. Yeah, I'm not calling the close. I'm just calling the
Right.
open.
But I agree with you. I think it will be high volume moving up in the morning. I actually think it will continue all the way through the day because the rest of the week is going to see more. executive orders, and every day we might get a new one.
Oh, we're gonna, yeah, new
So
new ones, plural.
some of them the market will like, and some of the market probably won't like.
No, that's true. Yep.
So we'll see how it pans out. But I don't know if tariffs might be part of that. Maybe the market doesn't like those.
Oh, I'm guessing again. This is we're gonna play 3D chess for a little bit because I don't think there's any question that tariffs will be part of the first week's drum roll of tariffs or executive orders, excuse me. Uh, but also they're just going to be negotiation. They're just going to
Yeah,
force the
that's
other
right.
side to
And
negotiate.
I think the tariffs, if executive orders on tariffs that come early on, like next week,
Hmm.
will be selective and targeted and specific.
Yeah, they'll be
They
time
won't be
bound and this, then
right.
that, and
They won't be broad tariffs. They'll
yeah,
just
and
be
they're
a warning shot across the bow, basically.
yeah, lots of warning shots. I do not expect a executive order, for example, that says 50% increase on all Chinese goods starting today.
No,
It will
that's
be
right.
something like 50% tariff on all Chinese goods starting in 30 days or something like that, all to
Right.
just force activity.
That's right. Yeah. Forced conversation. Yeah.
Correct. Correct.
That's right. Now, what if there's an executive order to buy Greenland day one?
I don't know. I don't again, I don't know the Constitution. I don't pretend to, but as far as I know, he could certainly make an offer, but that would
Yeah.
be funds that would Congress. The president can't
That's
allocate
exact.
funds.
That's exactly right. Congress is the arm of the government that initiates spending.
Yeah.
So
The
the
only
president,
exception is an emergency declaration of war, as I understand it.
yes, that's right. The executive branch, the president, cannot do something
No,
like that.
no. He can make
Congress,
an offer, but he can't fund it.
he can make a suggestion. He can request a bill, start
Mhm.
going forward in Congress, but he can't do something like that. He can't buy
Yeah.
Canada. He can't buy
Yeah.
Greenland.
Right.
So
I agree.
all those people out there that are up in arms about that, go read the Constitution and understand your civics classes from way back
Yeah.
when, if you even took them. So, yeah, so that's not going to happen. But it'll be interesting to see what policies are implemented because
Mhm.
that will give us a clue for the direction over the next 4 years. Actually, the next 2 years. The next 2 years is going to be the key.
Yeah. It's the 2 years. It's before the midterms. Yep. Okay.
Yeah, exactly. So, getting back to the market, I want to touch on something. I have this ongoing, I'll call it conversation. I'll put it in air quotes.
Mm.
Conversation with this economist. I will put that in air quotes
Okay.
on LinkedIn.
Mhm.
And I mean, the guy has lots of credentials for sure. He's definitely an economist,
Okay.
but he consistently says that the market is headed for a 1929 like crash this year,
Mm.
a depression like recession this
Okay.
year,
Yeah.
and even as I give him evidence, it doesn't matter. He says, all of my indicators tell me this. So I'm going to show you. I'm going to show you what he showed.
Okay.
It's right here.
Do you want to say his first name?
Thomas is his first name.
Okay. All right.
He's from the
So,
UK.
all right. So Thomas is declaring a 1929 depression. Let's see what he has to say. Okay.
Right. And here's what he says. This is for 25. End of 25, the stock market will be 3,700.
The S&P. Okay. Got it. Yeah.
S&P. Yeah. Crude oil will be down to 47.
Okay.
I mean, that could happen.
Yeah. But yeah. Okay.
Real estate price index 295.
From three. So that's down. What is that down? I don't know. 10%
Yeah. A little
roughly.
more. A little
Yeah. A little
more.
more.
Yeah.
290, 297. All right.
12% probably. Yeah.
Okay. All right.
Crypto, Bitcoin down to 47.5.
Hmm.
Any of this could happen.
Oh my goodness. He's calling for the 10-year note to be 2.75.
Yes. 10-year 2.75.
So let me just play that out.
We're gonna look at that in a minute, the 10-year.
Yeah, because one of the things that's really interesting is calls like this, they tie together. So basically what he's saying is the 10-year, so let's just play this out in my world. 10-year notes 2.75. Let's call it 2.7 so my math is quicker.
Hmm.
So 2.7, and then we're going to add 200 basis point of spread. So mortgage rates will be sub 5%.
Right.
Mortgage rate sub 5%. And he's calling for a 10% drop in home prices.
Yes.
Not possible in
That's
2025. That is impossible in 2025.
that's that's why I put air quotes around economist.
Now, so again, let's play this. Why is that impossible? Because housing doesn't move that fast. If
Right.
you take the mortgage rate sub 5%, and I don't even care if unemployment goes to 6%, you still have 94% of the people employed. You have now taken affordability from crazy high to below normal, and
Hmm.
you are going to see an avalanche
Massive
of demand.
avalanche of demand. Yes.
Yeah. So Thomas, you said,
And
right?
talk about it will be the definition of pent up demand.
Oh, it will be bananas,
Right.
bonkers.
Yeah.
Just these two things don't go together. Now, let me be clear. Could there be some things that cause home prices to go down 10%? Sure. Could there be some things that take the mortgage, the 10-year note down to 275? Sure. But you can't have both in a
Yeah.
single 12-month period, in my opinion.
Right. Right. I agree with
Oh,
you.
so he's also a gold bug. Look at that.
Yeah. Gold going up.
Oh yeah. So I know. I don't know Thomas from anyone, but I know his type. They flood my
Yeah.
channel every once in a while.
Right. Fed policy, Fed funds rate from 4.5 to 1.75.
Hmm.
1.5, between 1.5 and 2%.
Wow. Just
So
wow.
so this is and he's pretty young too. He's a young
Okay.
economist. So he's
I
he's
I would
he's
gladly
he's the type that thinks that at some point the Fed is going to go back to
the
zero
gold standard.
rates. Yeah,
Yeah.
not the gold standard, but zero
Oh, but
rates,
zero. We're going to go back to zero. I'll take that bet
which
too.
which will never happen.
No, I mean, shouldn't say
I mean,
never.
if it
Never.
does,
Never. It's a long
the
time.
world is ending. If it does,
Yeah, I wouldn't go that far, but yeah, it's extenuating circumstances. Yeah.
right? And CPI 1%.
In 2025.
Yes.
Wow. Let me play with that for a minute. So let's assume oil cuts in half. Shelter comes in. Man, I'll go sub two, but I can't see one.
I was just going to exactly say the same thing. I'd go sub two. 1.75 maybe, but
Yeah,
I can't
yeah.
see it. I can't see it going much lower than that.
Damn, I mean, what, I mean, why does this guy get out of bed in the morning? I mean, people that live in this doom loop. I
Now
mean,
I can tell you why, and you've seen it before as
oh,
well.
is he
And
selling a newsletter? Let me guess.
no, he's not. He's just trying to help people understand the crash that's coming.
Yeah,
But he's one of these guys, and he's young, so he doesn't know this. Probably doesn't know this yet. But he's one of these guys that's been around for decades and decades, and they always call crashes, and eventually they are right.
yeah,
And I've said that to him too. I said someday you are going to be right, but it's not today.
yeah. Not 2025. Not with these calls.
And I keep trying to explain the idea of a second. Well, we'll look at the stock part of this in a second.
You know,
I keep
it's funny. I'm just going through this chart trying to play out which ones I agree with. I actually think gold could be 3,200. I
mm-hmm,
actually think that's possible. But
yeah,
I I have no problem with number one. I think number two is bananas.
right,
I really don't know currencies all that well, so I'm just going to skip that one. No content. Number
mm-hmm,
four, don't agree with. Energy, I think that's a reasonable call. So far, two of them don't seem crazy.
right,
Equities, don't agree with. Crypto, not really my area. So I guess I like two of these calls. I like the precious metal and energy calls. Yeah,
mm-hmm.
yeah,
Yep, I would probably agree with that. I mean, currency is not much of a change, frankly. From
yeah. Just
108 to 107, that's not. That's
Yeah,
not
it's not my area of expertise. I don't.
it's not out of the realm of possibility. But we'll look at the 10-year in a second
Okay.
and the market. So keep that in mind. 3,700
Okay.
is what he's saying.
So
That's and
just
I
so I'm clear, we're looking at possibility of a crash up that Michael and Dan are talking about, or we could have a Great Depression 2.0, according to Thomas.
correct.
All
That's
right. Well,
right.
congratulations, folks. You just realized what the title of this video is going to be.
All right, let's take a look at. So I found the results of the stock market going back 75 years. So this 3,700, he puts this at the end of 24, 59.70. The high was actually 6,100. 59.70 to 3,700 is about 38% decline
Mm-hmm.
for the year. Now remember, he's saying end of 25. So he's saying this is what your return will be at the end of the year.
Mm-hmm.
So that's about 38. If you take it from the high of 61, it's around 40% for the year.
How many times has the S&P crashed 40% in a year?
That is a great question. You're leading the witness.
Oh, like I've done this before.
There you go. Never. It's never done it. Never, ever.
What's the worst? 10? I see
The
25.
worst was 2008, 37%.
Oh, 37. Okay, there it is. All right, so that's not crazy. So it's so how
No, it
many
is
years
crazy.
is this? 70?
No,
75?
no, it is crazy. This is 75 years in 1950. It is
And
crazy. That the
and
point
he's
I made was that has never happened. Never has it happened. And he said, "Well, yeah, that's because I'm calling it like Depression, 1929." I said, "Okay." The one thing that you're missing, and I say this to lots of people on LinkedIn that like to make these kind of predictions, they make them for the 10-year, 10 years gone up 100 basis points while the Fed has cut 100 basis points. That's a big red flag. Well, no, it's not. We're just getting back to normal. And every single time one of these people say these kinds of things, the first thing I say to them is, "Where is your chart that incorporates a 100-year pandemic? Where
Hmm.
is that? Where's your comment in all of these bullet points that mentions a 100-year pandemic? Nowhere."
Hmm.
And I said that to this guy Thomas too. I said, "Look, if we go back and say, okay, it's going to be like the 1929 crash, well, that's pretty close to the 1918 pandemic,
Right.
the 100-year pandemic. So 1918 to 1929 was 11 years.
Right.
That's not this year. If you add 11 years to 2020, you get 2031. And guess what? That's exactly where my secular bull market ends."
Yeah.
I said, voila, secular bull market.
Gotcha.
So
Okay.
again, I said, yes, you probably will be right someday,
Someday. Yeah.
but not today. It's
Got
not
it.
it's not this year.
Okay.
So let's look at the 10-year, and actually, if we just for fun, if we look at this chart of the S&P and go back, let's go back five years. I'll make it a weekly just so it's more readable. So there's 5 years. So 3,700 is what he said, right?
Mm-hmm. Yep.
So that's right here, right there.
Okay. Oh.
3,700 right there. So you're looking at basically the bottom of the 2022 cyclical bear market.
Mm-hmm.
So is that possible? Yes, of
Sure
course.
is. Of course it
Anything's
is.
possible. 3,200 on gold is possible. $47 on oil is possible. All of that is possible, but is it reasonable?
Yeah.
No, it's not reasonable.
No, I mean,
This was about a 20% decline,
right.
and we could get a 20% decline,
For
but
sure.
that's only going to bring us down to 44 right here, just right about where the 200 day is, and that a 200 week, I should say, right about there, which that would be reasonable for a significant decline. In fact, I would put it probably right about in this area,
Yeah, that feels possible.
4,800. I think that's possible. But if it does, then it's going to be, quick. It'll be like this. And by the time we get to October, the end of the year, it'll start coming back up. So that,
Mm,
you remember, his was the end of the year
correct.
down to 3,700. So the market could come down, but by the end of the year, it'll probably come back up again because we're in a secular bull market.
Got it.
And he said we are going to have a depression-like recession, a very deep recession. And
So
I
let's
said,
play
no,
that out because I don't think a lot of people understand what a depression level
right.
is like. So, my memory of the stats from the Great Depression
Your
is we
me-
had,
your memory of the Great Depression?
well, I've read it,
Go
right?
back.
My memory of reading about the Great Depression is we had, I think the average was 28% unemployed. So that's
Yeah,
one in four. I think it peaked at 31% one of those years.
right.
So let's call it 28. And no, so I mean, just that statement alone. If let's just say we got to half that, we got to 14%. Back to one of your earlier comments about the Fed never going back to zero. You're
Hmm.
wrong. We have
Yeah,
14% unemployment.
they
They're going
would.
back to
That's
zero.
that's what I said. Unless it was the end of the world, that
Yeah.
depression era would feel like the end of the world.
And again, I just want people to realize the tools at the Fed's disposal today, right? They're the buyer of last resort, all those things. Not only would rates go to zero, not only would they start buying, 10-year treasuries and mortgage, they'd be buying everything. They'd be buying index funds, they'd be buying
Hmm.
mutual funds.
Right.
They would send stimmy checks, they would do new business startup funds.
Right.
I mean, you think the printer goes burr, just what are you thinking? I mean,
Yeah.
I mean, I just stop right there. Dude, unemployment goes north of 10%. The printer comes back on.
Right. And by the way, they would not be able to do that if we were based on Bitcoin.
No, I mean, yeah, yeah.
Just a
No, that's
just an aside. So yes,
let's
they have
not go
lots
down
of
that
tools.
rabbit hole.
They've
Yeah.
got they've got lots of ammunition. So not going to happen. Certainly not going to happen in 25. Now, when we get to 2029 to 2031, then and the debt and the current debt continues to
Mhm.
escalate like it is,
Yeah, $1 trillion a year. Yeah.
then that could be possible.
It's really funny. I'm having flashbacks because again, I deal with a lot of housing crash bros,
Hmm.
bears, and a lot of their logic is kind of like this. All these bad things are going to happen and home prices will collapse an absurd amount in the next 12 months,
Hmm.
right? The largest price decline that I remember was just over 11% in a single year. And that's when the problem was single family homes. So when
Hmm.
people call for a 20, a 30, and I've had people call for a 40% housing crash in a single year, I'm like, nobody should be listening to you because
Right.
that's not how housing works. Now, if they only said housing will fall 40% over the next 3 or 4 or 5 years, that's actually a debate worth having. I mean,
Hmm.
I could intellectually get stimulated with a 4 or 5 year call on housing falling 40% because it has happened before.
Right.
But when they go 40%, 12 months, it's unaffordable. You don't understand, blah, blah. I'm like, no, folks, you don't understand because you're just a moron who's picking random numbers that have never happened before.
Yeah.
It's crazy.
And they've been saying that for 24 months.
Oh, dude, I have guys been calling it since 2021. We're talking 5 years now. I mean, like, okay,
Right.
you were wrong then, and then, and
Yeah.
then,
And
and
it's
then.
and it's 12 months and then 12 months and then 12
Yeah,
months.
I mean, you guys don't learn. It's crazy.
Yeah. But they'll be right someday. They
No, they
will.
will never be right that housing crashes 40% in a single year. Never right.
Right. Yeah, that's true. That's true. Well, same with this guy. It's going to be interesting because he has, he's got receipts. He's posted all of this,
Well, more
and I'm
importantly, you have receipts because I got
and
to
I
tell you,
have
dude,
receipts.
I would take screenshots because the real estate forecasters who make these calls will. I have video evidence. Go back and delete videos. I had my
Oh yeah.
team chop up I don't know, a 2 minute video of their calls and save them because I knew they would delete the videos. And yep, they deleted the videos, but I got receipts, baby.
Yeah, exactly. It'll be pretty interesting. Be pretty funny.
Hmm.
So let's look at the 10-year
Yeah, the 10 year
because,
shocked me yesterday or this week.
well, I've been saying that's probably what's going to happen.
Yeah.
When it got near five, that's the resistance, and then it will start
Hmm.
pull back.
Did you see what Christopher Waller said on Friday?
No.
Christopher Waller said, "We are going to have 3 or 4 rate cuts this year. Basically, not one in January, but we could in March."
Hmm.
And I almost fell out of my seat. I'm like, "What?"
So why did he think that would be the case?
Well, the speech that I read really didn't say it. It's just his call. He thinks that
So what? So why would you think they would have to do rate cuts?
well, there's only 2 reasons. So, A, inflation would have to behave better between
Yeah.
now and March.
Or actually drop off a cliff.
Well, that's what I meant by behave better, right?
And
Inflation
we've
has to roll over.
Yeah, we'll look at that in a second, but we've showed that many times. The 12-month window is going to cooperate with that for the next four
Well,
months.
yeah.
So
So we'll see. So again, we'll see. And then second, the job market would have to deteriorate. So let's put a number on that. We'd
and
have to
that's
get
the key.
unemployment to 4.8 to 5%.
Yes, that is the key right there.
Yeah.
That's the one that will do it.
Yeah.
Inflation is going to look like it's coming down
Yeah.
almost regardless of what
Mathematically.
happens. But
Yeah.
the unemployment number is the key.
Yeah. I agree with that. Okay.
Absolutely, and it went down last month. So
It did 4.2 to 4.1.
yeah, so that's not cooperating with Thomas either.
No. Yeah.
Thomas is
Okay.
expecting this huge recession. I just don't see it. But let's look. This is something that I noticed when I was looking at the 10-year, actually preparing for this. I always like to identify patterns
Hmm.
when I see them. And I did a Zoom call with my subscribers to my website yesterday. It was a very lively conversations, interactive. So anyone can ask me anything. We can, go through anything they want. And I explained what these patterns mean. So this is a head and shoulders potential pattern. However, it is not a head and shoulders until it executes.
Correct.
It is only a potential pattern. But I like to identify them when they're forming
So
because
let's say you're right. What does that mean? Is that a trend reversal or what is a head and shoulder?
that's a trend reversal.
Okay.
Yes.
Got it.
And the measured move, how you measure the target, is you take the distance from the neckline, which is essentially support right down here, to the head, to the top up here.
Mhm.
And then you take that distance and figure the other side. So it's 6% up and 6% down. Puts it down
Okay.
here at about 4.5%.
4.3,
4 point, yeah, I'm sorry, 4.3%. Right.
which is interesting because there's a real estate guy. Um, why am I forgetting it? Barry Habib actually calling for mortgage rates to go sub 6.
Mm-hmm.
Something like this would be helpful
Right.
to his call.
But I want to stress this is a potential pattern
No, totally get it. Totally get it. Yeah.
that I recognize. It is not a pattern. It is not a head and shoulders until it goes below the neckline, below the support line.
Okay.
So this could come down or it could start going up. So it would be this neckline would then be slanted slightly up instead of straight across.
Hmm.
But that's a valid head and shoulders too. And this could go a little higher than this. If this was slanted, it could go up to here, 4.7, and then
Okay.
start coming down again. But it's not a head and shoulders until it breaks the support line.
Okay.
And if it doesn't do that, then I will take all of these lines off of this chart and it no longer will exist. But
Okay.
right now, it is a potential head and shoulders.
All right.
But if it does execute, then we're talking somewhere around 4.3, 4.25, probably 4.25% for
Okay.
the 10-year.
Yeah.
All
Well,
right.
that's what Barry Habib's hoping for.
Yep. So we went up just like I said that we would get up near the old resistance. The high
Hmm.
was 4.8,
Okay.
4.809.
Yep.
So I figured we get close to five, and then it would start going back down again.
All right. And you nailed
That's
it.
what's happened. that's what's happening so far. So we'll continue to watch it and see how it behaves. Everything else is indicating, continued strength. Bitcoin. Bitcoin's one that I had a head and shoulders pattern on too, and it broke the pattern.
Right.
So here's a left shoulder, there's a head, the right shoulder was right in here. Well, it went up and it broke above, broke higher, came back down to the neckline, went back again and broke it again.
Mm.
But I took all those lines off because it's no longer a head and shoulders pattern. It's now going up to test resistance at 106. And it never actually really closed above 106, even though it got there on a daily basis.
Yeah, that's one
But
thing I expect on Monday is some executive orders around cryptocurrency and Bitcoin specifically. So,
oh, really?
shall
In
see.
what way?
Yeah.
In what way?
Well, I don't know. I just think the fact that David Sachs has been nominated as the first, I don't know what he called, crypto and AI czar. It's
Mm-hmm.
really a job or function that doesn't exist or didn't exist until Monday. And I've got to imagine you got to put some teeth there. It's what I think.
So what kind of orders? Well, first of all, has he been approved?
Oh, so I don't know how any of this stuff works. Again, I don't know. Do you get approved for a job that doesn't exist? I don't know.
Well, if
It's
if
not
it
like Treasury Secretary or one of those things.
no,
I
that's
don't
true.
I
That's
don't.
true. It's not a cabinet post.
It's not a cabinet
Um,
post. Yeah, so
right. So,
I
but
don't know how that
he
works.
would have to report to some
No
um,
idea. Don't know
that
how it
post.
works.
I would think he'd
But
probably have to report to secretary. But
but
at any rate, I don't know if by Monday he is going to be in a position to actually do it. So I think it'll take longer for
okay.
crypto.
Yeah.
I
All right.
don't think crypto will be one that will be on the docket right away. And what do you think he would do? Do you think he would say, we're going to build a Bitcoin reserve? Or do you think he would say, we are looking at creating our own crypto,
No.
government backed crypto? Or do you think
No.
he will say, we are going to regulate crypto? I mean, there's any number of directions, and any one of those could have a different effect on Bitcoin.
I suspect it will be something like um he's basically going to take crypto out of the penalty box. I think the last administration, Gary Gensler, I think his name was, the SEC chair,
Mm-hmm.
uh basically was anti, in my
Right.
opinion.
Yeah.
And the new team is not anti, so I think he's going to make statements simply around we want to be the leader in this new asset class. We want to mine Bitcoin in the US.
Hmm.
With US. And I just think he's going to declare, unlike the last administrations, that the US needs to be a leader in this space. And,
Mm-hmm.
I think that might be the extent of it. Because again, I don't think it has to be more than that, just to signal the vibe shift
Right.
from
Yeah,
past to
that's true.
present.
That's true.
Yeah. So,
That would be, though, an interesting conundrum,
okay.
or what you just said that I'd never really thought about.
All right.
If the
Tell me.
if the government said, we are going to be a miner of Bitcoin.
Well, again, I did. If I said that, I didn't necessarily mean the government's going to mine Bitcoin. I think it's going to incentivize U.S. companies to mine Bitcoin. So
Oh, okay.
if I
All
was
right.
mis, yeah, I mean
Right.
that's an interesting pivot. I mean, could the U.S. government actually mine Bitcoin? Sure, they could. But wow,
Well,
that'd be weird.
technically they could, except it completely against the whole concept of Bitcoin being unregulated
Yep.
and decentralized. And
Yeah.
then you have a government that's actually a miner. That would be pretty interesting.
Yeah, because what would happen if that happened? We're just playing with stuff that we didn't practice. Like if the U.S. declared that and started doing it, you would see other countries doing it.
Yeah.
Like who
So
isn't there a country in South America that's like buying one Bitcoin a month or something?
I think it's Guatemala. I think it's, yeah, one of those in Central
El
America.
Salvador, I think. I think it's El
El
Salvador.
Salvador, maybe that's it. Yeah.
Yeah.
Yeah, one of those down there is doing that. But I did a whole show on Bitcoin, how it's created,
I bet that
how
was
it's
fun.
how it's mined. It's on my YouTube channel. It was done the day after Christmas, so the
Okay.
26th. So if you go back and I'll probably move it to my Technical Tuesday playlist, so it's
There you go.
easier to find.
That's a good idea.
But I did a whole session explaining how Bitcoin is created
Mhm.
and how it's mined, and made a comment that it's getting harder and harder to do. In
Yep.
fact, it's there's about 1 million Bitcoin left to be mined,
Right.
and the last one is projected to be in the year 2140,
Mm.
more than 100 years away.
Yeah.
So 20 million now has been mined. 21 million is the limit
Mm.
theoretically.
Right. Yep.
So 1 million more, but it takes more than 100 years to get there. And
Yeah.
the reason is that it takes, every time you create one, first of all, you don't really mine Bitcoin, you mine a block in the
Blocks.
blockchain.
Yeah.
You add a block to the blockchain, and when you add one, you get
Mm.
Bitcoin as a reward for doing that. And
Yep.
Bitcoin gets halved every
Yeah.
4 years.
We don't have to go through this. If they want to watch the Bitcoin thing, go to your
Yeah,
channel.
go watch the
I don't want
video.
to I don't want to bring that noise to my channel. It's not my area, not my expertise. I have
All right,
1% of my net worth in it because I see it as an insurance policy. I'm not
right,
trading, I'm not buying more. I have it. I own a full more than a full coin, but not go
all
away.
right.
Stop
Good for
this
you.
rat hole.
Okay. All right, it's pretty interesting, but if you go back and watch that and really understand what that means, what Bitcoin mining really means, it would be a conundrum for the government to actually do it.
Yeah. Yeah. That's it's just an interesting brain teaser that I had never thought about. So very cool.
Yeah, yeah, I hadn't thought about it either, so it is interesting. So, what do I think for next week? I think next week is going to be bullish for the market. I think the inauguration, assuming everything goes smoothly, and we have a new president on Tuesday with you know throwing out executive orders left and right. I think the market's probably going to like it, and
Yeah, I think
probably
so.
will head higher, and probably will
Yeah.
head back up to. If we look at the S&P again, back up to the highs, 6,100, and maybe
Hmm.
even break through,
Yeah.
which is going to make it harder and harder for Thomas to hit his goal of 3,700.
Yeah, I
You
just
know,
don't know how people get they're so convinced that things that have never happened before are going to happen. It just doesn't make a very good logical argument.
no, and he claims that he has all of these economic tools at his disposal. That when he's analyzed all of the tools, it points directly to a recession worse than the Great Depression.
All
But he
right. Well,
never he never but he never once mentions a 100-year pandemic in any
yeah,
of that,
that's all right. Well, that's
which
cool.
is the little piece that everyone keeps leaving out.
You know what, Dan? Let's do this. Let's invite Thomas to come on the channel with you, and
Oh,
I will be an independent moderator
that
pulling different pieces and see if he's game to have that conversation.
that would be very interesting. I will have to say, unlike many others, he is very civil.
Good. Well,
He
yeah,
he
he's
well
from
he
Europe. Yeah.
welcomes opposing views. He compliments thoughtfulness.
Well, Thomas, let's go. Let's have a
So
conversation.
that would be actually pretty interesting. Let's real quick look at crude oil since we were talking about that.
Yeah.
It's
When was the
scraped.
last time it was $40? Did we go back out a few
Yeah.
years?
Let's see. Let me
I'm going to guess 2021.
$40. Let's go back. 21, you think?
Yeah, I think so.
Go back 4 years. Nope.
Uh,
Before that, a little bit before that. Let's go back 5 years. That's way back here in the pandemic. It was
yeah, that's what I
let's
meant.
see,
Pandemic. It went
pandemic.
negative for a day.
Yeah,
Remember that? It was
it was
negative.
10. Yeah, it was $10
Yeah. Okay.
way
So
back
a
here.
long time ago.
$6.50.
How about
Let's
60
see.
bucks? 60 is a lot more reasonable, right? 80 to 60.
60 is right there.
Yeah. So 60
So that
certainly seems possible.
so 60 was the just before the pandemic started.
Mm.
And then after we started recovering in 21, it hit 60, and it really hasn't got back. It has not come back there since 21.
Yeah, that was when we were getting all these drills back online and all of that. Yeah. Okay.
Yeah, that's right. That's right. Yep. Yep.
Okay. All right.
So
So that's
60,
oil.
60 is reasonable. I mean, 60 is not that far away.
Yeah. But it has been
40
going
though.
up if you zoom in now. Yeah, 40 is a
Yes.
little wild.
I mean, you can kind of see it right there. But yeah. His projection was 42, I think.
Yeah.
So 42 is right there,
Yeah.
right about there.
There-ish. Yeah. Yeah.
Yeah. I mean, that's certainly doable, possible.
Yeah. Yeah. The
Not,
chart says it's possible. Yeah.
yeah, it's possible, but not likely. I mean, it would have to be a serious recession for that to happen.
Or we just unlock 5 million barrels a day in
Right.
supply.
Yeah.
Yeah. There's
And
two
send it
sides to
down.
that
But
equation.
but but then what will that do to the economy?
Well, I think
The
there's two
economy.
things you have to ask yourself. I think the first thing to ask yourself is how soon do producers turn off the spigot? Because
Right.
again, just because you're producing, I'm going to make this number up, 100 million barrels a day, the price goes down 50%. I guarantee you they're not producing 100 barrels a day. That just
Yeah.
mathematically doesn't work.
That's a good point, actually. Yeah. So a supply and demand issue.
Yeah. So,
If it gets too cheap, they're just
yeah, you just
stop
stop
producing.
supply. Shocking.
Yep. And then the price will go up.
There you
Just
go.
supply and demand. But yeah, I don't see it going down to 42. It could though. But
Yeah.
but like you say, even if they start producing more oil, it should help the economy.
I think it does. I think $60 oil is reasonable. I think $60 oil keeps most of the producers profitable.
Right.
I think 40 bucks, most producers aren't profitable, which means they'll just turn supply off.
So you see that line right there? That's pretty much where, after it broke out over here in 22, 21,
Mm-hmm.
that's pretty much where it's come down to. So it's a very major solid support,
Yeah.
65.
60. Yeah. So there you go. So 65. Yeah. And again, I think if the US comes out and says drill baby drill or like message and we unlock 3 million, 2 million barrels a day, oil will get cheaper and cheaper oil helps the economy. It helps the middle class.
Yeah, that's
So
right. And this is a good example of how technical analysis works too. As you said, when oil gets too cheap, they just stop producing as much.
yeah,
And it kind of
magic.
shows you right here what that price is.
Yep.
60 to 65, that's when they will stop producing and
There you go.
supply will dry up. There's 62. Here's 60 is right about there. There's 60. So yeah, at 60 bucks that they'll stop producing and supply will dry up, prices will go up. So yeah, I think $60 is probably a good target.
Well, very cool. So if we were to wrap this up, Great Depression 2.0 versus crash up. You are on the crash up side. Thomas is on the Great Depression 2.0. We'll see if we can get that interview lined up. That would be a lot of fun. But net, you think next week's set up to be a positive week, in your opinion?
Yeah, I think so. I think the market bias chart here is implying that. I think it's going to continue with positive vibes from the inauguration, with the all of the comments that will come out next week, both from Trump and other people in the administration. I think it'll all be positive for the economy, and I think and let me not forget, earnings are coming in great.
Yeah, it's too early for me. I mean, we've got the big
It's
banks
too
too big to
early. The banks
fail.
the banks just started, but the banks'
Yeah.
earnings are coming in pretty well.
Next week though, we get a lot of small banks. That's got my attention. Right?
Right.
That second, third tier of banks. Right?
Yeah.
When the big eight or whatever it is come out with, they went 8 for 8 on earnings and 7 for 8 on revenue. Wells Fargo being the one miss, I think. It means nothing. They're basically government backed entities, in my opinion.
Yeah. So this is regional banks. This chart here.
Oh, okay.
KRE. KRE is the ETF for
That's
regional
that's
banks.
that's kind of an ugly chart.
It's kind of an ugly chart. However, the chart is not breaking down.
No, it's
It is still
basing.
trending higher.
Hmm.
So while
Not
it's
sure I see that, but okay. Oh yeah, okay. If you
so,
go back there, yeah.
right. So here's this was resistance, kept hitting it, it broke out, came back and tested it, broke out, and it's coming back and testing it again and now breaking above it. So this is all positive that it tested it and it's going higher.
Yeah, we'll see. Again, I think next week would be very important for this particular index. I think a lot of that upward movement were because the big eight banks did well, but again, not they are not the same in my opinion.
So now these are the regionals.
Yeah. Very different.
So
Very
there
different
there's the
balance sheets.
yeah, there's the general trend right there. It's a little
Cool.
bit below it right now, but it's heading back towards it.
Nice. All right. Well, this can be a lot of fun. One more time, show the website, show the YouTube channel.
Yep, it's all in the same place. The website, breakpointtrading.net. Just go there, and the YouTube channel is right in the upper right. Just click that, and it'll take you right to it.
Awesome. I appreciate you, buddy. Take care.
All right, have a good weekend.